What's going on, everyone? 68% of stocks in the S&P 500 closed down in the red today, as there are some crazy things happening all over the world right now that is making for a pretty crazy stock market ahead. So first things first, as I'm sure many of you have already heard by now, there are a lot of rising tensions in the Middle East as Iran fired hundreds of missiles at Israel. At the same time, we have 50,000 dock workers striking, closing East Coast ports and basically cutting off nearly half of U.S. imports. At the same time, the VIX is up over 15% on the day. Chinese stocks are still rallying, and it's only Tuesday. So we have a lot to cover today and a monster big money trade towards the end of today's video. If you're going to watch one video to the end this week, it's this one. But besides that, Tom, let's jump right into it.
Yeah, Mike, today was pretty crazy, and I would say the craziest sector of them all was pretty much like the oil sector, in my opinion, besides the VIX, right? Being up 15%. That's pretty insane there. But ZOM, Oxy, and the oil stocks were really popping off today with this Iran-Israel news. There were also some defense stocks popping off as well, which we'll talk about in a minute. But, Mike, this situation is pretty insane. I can't believe it. Apparently, 200 of these missiles got launched at Israel. Of course, some landed. I didn't hear any reports of any injuries or anything like that yet, but that's quite a bit of missiles. Actually, I first saw the reports and it said 100 missiles. Now they upped it to 200. I wonder if that'll end up being the number that we hear, tomorrow morning after some of these numbers, get updated even more. But it's definitely a big situation whenever you have, these tensions escalating in this type of way. And to even make that, to even add tensions to it, Israel actually invaded Lebanon yesterday as well. So things are definitely heating up in the short term.
And then on top of that, Israel also responded to this recent missile attack from Iran and said there will be severe consequences. So the main thing to take away is that tensions are rising, and this has impacts in multiple different ways. But in a stock market specific sense, definitely keep a close eye on oil stocks. Stocks like XOM, OXY, BNO, CVX, XOP, and many others have a lot to gain as the price of crude oil increases. As many of you would guess, when you have tensions in the Middle East, which is a major oil-producing region of the world, that definitely not only hurts supply for oil, but also when you have rising tensions, it also increases demand for oil and energy, as it takes a lot of energy and oil just to, I guess you could say, fuel conflicts around the world. On top of that, China's restarting their economy and turning their money printers back on, which is going to boost their economy, in turn taking up even more oil than we had in the recent past. With everything being said, there is a big shift in supply and demand on the horizon right now for oil, so watching these stocks closely will be pretty beneficial. But another area of the market that has a lot to gain from this news is the defense stocks. So stocks like Lockheed Martin, Raytheon, General Dynamics, Northrop Grumman, and all these other companies, as you would imagine, have a lot of money to be made by making some of this military technology, other weapons, equipment, and software that is actively involved in this situation. So keep a close eye on those as well.
Yeah, the defense stocks were actually amazing. Like Lockheed Martin, I feel like they've been going under the radar a little bit, Mike. They were up 3.6% today. I know quite a few people were looking at them today, but over the past few weeks, I feel like they've been going under the radar. Like, look at the chart of Lockheed Martin this year. This has been an insane extension up through resistance and up to this $600 point that it finally passed here today. So, yeah, these stocks are definitely going to be on my radar too. And, Mike, whenever I get into this, I'm also looking at gold. I know that gold is now approaching the all-time high again. Now, today, it wasn't the best day for gold. It was kind of slow and choppy from the point the market opened, but you can tell that pre-market gain was pretty good there also. But I am still watching gold, Mike, because it got right back pretty close to that high here, and I would not be surprised to see these tensions push us to another new high in the short term.
Yeah, and then like as we look at relevant areas of the market related to this conflict, it's important to realize the way in which the flows are changing. For example, whether we're looking at defense stocks today, gold or energy or oil or whatever the case may be, we can see that there are big imbalances between supply and demand right now, which is what ultimately offers good opportunities. As we look at these intraday charts, you can see that we are seeing strong, powerful, sustained moves with these stocks. So, I guess you could say just riding that momentum is the key. You don't have to be perfect at predicting every single minuscule move, but just getting, good enough entries and exits is really all that matters, assuming that you can keep your losses small. So keep that in mind, but we're going to talk a lot more about I guess you could say plays related to this as the video progresses, but we have a lot more to talk about before that happens, and specifically with the port strike that is going on. Basically, as you all know, the port strike is in full effect right now, and this is especially a big deal because 43% to 49% of imports that come into the country go through these ports. So to see them shut down not only causes a nightmare of a logistics problem, but it also causes prices to rise and inflation to kick back up, which is a massive risk to the economy. So if we see a sustained port strike, that can be a major, very pivotal event over these next couple weeks.
Yeah, and I've been seeing a lot of pressure for like Biden to use the presidential powers to do like that 80-day cooling off period with the Taft-Hartley Act, but I haven't really, Biden obviously said he wouldn't do it, and I don't know if like maybe they'll, pressure him into finally doing it if like it ends up causing enough delays and enough backlogs. I mean, I hear that for every single day that these ports are shut down, you can pretty much act like it's going to take a week to get caught back up. So like if it's 5 days, that's going to be 5 weeks that it takes these ports to finally get like all the backlogs and everything like that. And we have to keep in mind too that it's going to be bad. Like let's say that these stay extended, there's like food out there on ships that could go bad and, a whole bunch of stuff that, obviously can happen. Obviously, I could be here for hours talking about some of the logistical problems, Mike, but I am worried for some of these tech stocks in the short term too. Apple had some really bad price action this morning, and I'm not attributing this price action solely to this, but at the end of the day, I mean, some of these tech stocks had some pretty bad moves today, and that might be a worry that they are worried about, getting goods in on time.
Yeah, look at the heat map. It was a pretty red day across the entire board, which says a lot. And I know we talked a lot about, some retail stocks like Walmart and many others that could be hit the hardest in a situation like this. And while they haven't fallen too much just yet, if we do see this strike last for, an extended period of time, again, it will have very severe consequences. So let's keep a close eye, not only on, you could say retail specific stocks like Walmart and tech stocks like you mentioned, but even just the market as a whole, because in the same way, like a rising tide lifts all ships, I guess you could say like a falling tide, does the same thing in reverse. But either way, when you see overwhelming bearishness come into the market, it says a lot, and it's not a good sign. So definitely be a little bit skeptical about the market over these next couple of days, because these intraday flows were certainly not the best. And Tom, speaking of that, we're actually now into the month of October, which isn't the best time of the year, especially during election years.
Yeah, it's definitely not, Mike. Like October during the election years is the worst month of the entire year, and we got to keep that in mind. Today marks the very first day, and we definitely didn't kick things off very well. So if this is how October is going to go, I'm going to be very worried. And, of course, all of this is happening in the Middle East and stuff right ahead of the elections, too. It's creating a lot of panic, I would say, in people's minds now. We already had the tension from the elections. Now we have all this other stuff playing in with the strikes. It's like, Wow, how much could hit on October at that time? And, looking at the SPY here, Mike, we're still pretty close to all-time highs, to be real with you. But today's price action wasn't the best, in my opinion. We started to fall under some pretty major levels, which was that 570 mark that I talked about quite a bit. And we actually rejected back under there and tried to move up towards the end of the day, but that rejection was pretty steep. So for tomorrow, I'm really going to be watching that low of day right around that 566 mark. I'm watching 568 as a major support as well. And for resistance, I'm really watching that 570 to 571 mark, and then 572, 573, and then the all-time high up around that 575 area.
I think the most important level for the entire market right now is right around 566 on SPY. Not only was that like the low of day today, but it was also a key level back on September 20th, where the market basically bottomed out right around there and then ended up breaking past all-time highs. So if we do see a break below this level, that would signal a pretty major shift in sentiment and just supply and demand. And basically, if we break below this, it's not going to be good. So keep a close eye on this level heading into these next couple of days, and we're not that far away from it. So it's going to be an exciting October. But Tom, going into tomorrow, do we have any major events or earnings to be aware of?
Yeah, so with the earnings, there's not too much. We do have Levi on the calendar for after hours, RPM and ConAgra Foods in pre-market. Not really anything crazy there. The big report of the week was Nike, and they actually reported tonight. And looking at the chart here, it's not the best report so far. So we'll have to keep our eyes on Nike heading into tomorrow. But there was some economic data today, like the jobs openings and the ISM manufacturing PMI. The market moved a little bit for a minute, but then kind of shrugged that off. For tomorrow, there's not too much on the radar, just some Fed speakers. But then Thursday and Friday is where we get more into things with the ISM services PMI and the unemployment rate. But I'll get more into that as those days approach.
All right, sounds good. But before we move forward, we have to do a little check-in with these Chinese stocks because they are ripping. So basically, as we look at stocks like FXI, BABA, FUTU, PDD, BILI, BEKE, there's a million of these stocks. They are ripping right now, and they pulled back a little bit yesterday, but it just goes to show that this recent buying pressure with these Chinese stocks is truly significant. So let's keep a close eye on them as always. There are scalp opportunities riding this short-term bull run, but realistically, if you're someone who's looking to swing or hold these plays for more than a couple days, it would be better to just wait for a pullback.
Yeah, I would agree, Mike, and I really like how a lot of them are approaching their recent resistances as well. It'll make for some pretty good risk-reward ratios on some scalps if we do see some good breakout opportunities here. My big concern is if we have a big gap up or something like that, then it might make that a little bit harder, obviously in pre-market if we end up at 44 or something. But at the end of the day, there's great momentum here. And the thing I really like is that we're also getting a lot of good intraday moves. Like the intraday movement with these China stocks today was fantastic. From the low of day to the high, JD was up 8.9%. I know it only shows 7.3% here because of, pre-market movement and stuff. But man, the China stocks are still on fire.
No doubt. So let's keep a close eye on them as they have been leading the market. But besides that, let's get right into some setups and predictions. A stock I'm watching very closely right now is Apple, and it is to the downside. Apple is one of the stocks that led the market lower today, and basically this stock started selling off before the market even had a chance to open this morning, which goes to show you that there is a lot of urgent selling pressure with this stock. At the same time, the intraday price action was pretty weak for most of the day, and it still closed down by almost 3%, which is a lot for Apple. They're also making lower highs over the past couple of months. So with all that being said, I am looking at Apple in a bearish way going forward. I would not be surprised if we saw a retest of the $220 level as a first support bounce, and then looking at some other key levels right around 217 to 216 after that. But either way, Apple's definitely on my bearish radar.
Yeah, there's some pretty big supports coming up. I really like that level in the short term, like 224, 225. I'm definitely watching it down in the short term as well. With my first play, I'm looking at Bank of America to the downside. The banks are looking pretty bad in the short term as well. And I know that we've been eyeing these up for a long time. And in the short term, there's a pretty good rejection going on right around this $39 to $40 mark on Bank of America. So I'm really going to look for just some good momentum and price action to the downside tomorrow with the overall market potentially. And there's a big support around 39. If we start to see a big break there, that'll be, obviously the best potential for like a scalp intraday. But even for the next like few days, I'll be watching these banks to the downside, Mike. Looking at the daily, Bank of America has a great double top going on.
Yeah, I'm a fan of this setup as well, and like we talked about in some of last week's videos, JP Morgan is also in a somewhat similar bearish setup, and I'm a pretty big fan of that one to the downside as well. So either way, I'll keep a close eye on JP Morgan and Bank of America, but another stock that's on my radar is ExxonMobil, and it is to the upside. We talked a lot about what's going on in the Middle East right now and how it is bullishly affecting oil stocks and oil prices. So ExxonMobil not only has a lot of positive news going on right now, but it is also in the process of breaking out of months-long consolidation. The stock is breaking out right above that $120 area, and it's starting to move with some great momentum. So with that being said, ExxonMobil is definitely on my bullish radar, and we will have some resistance coming up right around that yearly high, around just under 124.
Yeah, that's huge on the daily, and 120, I'll definitely be keeping it on the radar for tomorrow, Mike. Of course, I love ZOM because my next play is on Oxy. These oil stocks are great in the short term. This is where the money's flowing, so we have to keep our eyes on these stocks. If I see Oxy break above the $54 mark, I'll be watching it to the upside. And Mike, whenever I go and I look at the $54 mark and the $55 mark on Oxy, those are going to be some big targets. More specifically, 55. I know 54 is huge on the Bookmap as well, and that'll be a great breakout area for tomorrow. But as a target or even a resistance just to look out for, 55 is very crucial on these stocks. Oxy used $55 as a support for like 2 years in a row. So be very wary as Oxy starts to rise into that level. But I will say though, Mike, like right now, the amount of momentum that's out there, we could easily break through these resistances like they're nothing, but it's still something to keep on, just to keep in mind, especially if you're scalping.
Yeah, important levels are key, especially in this context. So good stuff there with Oxy, but it's now about that time for today's momentum plays. And with the first one, we have SoFi to the downside.
Yeah, SoFi had a pretty bearish move today, down around 3%. If they break under the $7.58 support, then keep watching them down.
All right, with the next one, we have JD to the upside.
Yeah, the China stock right at resistance. If it can break above 43.30, watch them up.
All right, and then with the last one, we have PayPal for both directions.
Yeah, PayPal fell a bit today. If they're able to break back below $77 even, then watch them to the downside. If they're able to break back above 78, then watch them back up.
All right, so we have the upside level for a potential move higher. We have the downside level for a potential move lower. This is for PayPal. Don't forget about the upside level with JD, and then the downside level with SoFi. Either way, these three stocks are on watch for potential day trades tomorrow, if and only if they break through the levels Tom listed. The stronger and more consistent the price action is, the better the setups become. If they don't break the levels listed, don't force the setup. Again, we're looking for strength and momentum here. But now that we're past today's momentum plays, it's time for what everyone's been waiting for, which is today's $6.8 million big money trade, and we are looking at ticker symbol XOP. So XOP, for those of you who don't know, is an ETF that follows oil and gas exploration and production, and I think this is very interesting to see this monster trade getting filled as we have this news going on in the Middle East right now. More specifically, the big money bought the 135 strike call options that expire on December 20th of 2024. For my advanced traders out there, this is technically a call debit spread where they shorted the 145 strike calls. But with that being said, XOP is moving to the upside with a lot of momentum right now. Of course, the news in the Middle East has big implications for the entire energy sector. And at the same time, as China is stimulating their economy, that will also increase the demand for oil going forward. Either way, oil is already actively moving to the upside in a good way as it broke past $70 per barrel today. The higher oil goes, the more beneficial it is for oil companies. With that being said, while this setup is very interesting and while it will be watched very closely going forward, it does just because this is a massive big money trade, that does not mean that this trade has to increase by 200% in days like the recent Chinese big money trades did. Understand that these options have until December 20th of 2024. The reason we are so strong about sending out these reminders is because we want to make sure everyone's trading in a smart, disciplined, long-term trading-oriented way. Don't let the greedy emotions get the best of you trying to catch a 200% bomber like some of the recent big money plays, right? Let's continue to trade in a disciplined mindset. And, besides that, Tom, I mean, this is a very interesting setup, and it's a pretty big money trade.
I actually love it, Mike, and there's a few things about this that I really love is number one, the setup with it. The technicals are great. It's on a perfect support. That support around 126 to 128 is amazing. And then also just like the pattern heading into this setup is amazing. If we look at the pattern within this circle and within this circle, these patterns are, dead nuts perfect. I mean, they are so similar that it's striking, actually. And we're getting this going on with the Middle East. We have some good news backing up the play as well, and it's kind of near support still, having some pretty perfect bounces. So I don't know, Mike. This is one of my favorite big money plays in a while, and of course it's on a hot sector as well. But guys, just because I like it a lot doesn't mean to go all in or anything like that. Keep your position sizing smart, and like Mike said, don't expect these to go up 200% right away like the others. There'll probably be a lot of chop with these oil stocks.
Yes, and keep in mind, in situations like the one that we are in right now that is heavily tied to geopolitics and tensions and conflicts and war in the Middle East, there's a lot of, factors at play here, right? And a lot of these situations happen and take place over weeks to months at a time. So either way, keep a close eye on this setup going forward. But besides that, we want to give a giant shout out to today's member of the day, Darth Bane, who hit it out of the park today with some PDD call options. That's a nice 777% gain right there with some PDD calls. So huge shout out to you, Darth, and keep on rolling. If you guys are into short-term trading, you have to check out the first link in the description and the comments down below. The StockedUp trading floor basically gives you everything you need for short-term trading, whether it is access to our custom-made bots, the ability to chat with Tom and myself all day long, the big money trades on the same day the trade is made, but before they're covered in these videos, our weekly live events, our giant selection of extra bonus spots and tools and features, and all upgrades are included. So basically, if you're into short-term trading, the StockedUp trading floor is the place to be. If you want in, the first link in the description and the comments down below will be the route to take. But besides that, Tom, I am very excited for the rest of this week and honestly for the rest of this month because we have a lot going on right now, and I have a feeling things are going to start to get pretty crazy pretty quickly.
Yeah, me too, Mike. And there's a lot of good opportunities to go on with this craziness as well. I know, like, a lot of people out there are probably obviously very freaked out and stuff right now with a lot of the stuff going on, of course, with the strike, but even more importantly, with a lot of the stuff in the Middle East. You never know what this could end up dragging us into or what might end up coming of some of these situations. So just, be obviously prepared for anything right now. Be prepared for more weird black swan events, and keep risk maybe to a minimum in the short term. I know it's tempting to go like all in on some of these plays, but with all the volatility, there's going to be a little bit of added risk as well. And I'm sure a lot of people are going to start de-risking, as we're kind of starting to see with some of the tech stocks.
Yeah, and I think that's more than justified, right? As we have these big events going on in the world and elections coming up before we know it, things are about to get pretty crazy right now. So it's an exciting time to be a trader. But while we can look at specific events and, moves that already happen, like with Chinese stocks, it's easy to like fall into some common traps that many traders fall into. But understand that your day-to-day trading habits mean more than anything else. Following the money, having a plan with your trades, and even more importantly, respecting that plan, knowing exactly where you're going to cut losses, and just having like a well-developed system is more important than anything else. Your trading mindset is arguably more important than any short-term trades that you take. So if you want to focus more on good trading habits and, just trading the right way, definitely check out that first link in the description and the comments down below. This is specifically what we focus on in the trading floor. But besides that, thank you all so much for watching, and let's have a great day in the market tomorrow.